So we're moving to section 4, reports on internal controls. What have we covered so far? Well, basically, we're looking at the relationship between the board of directors, the audit committee, the internal control system itself, and indeed internal audit. And indeed, the theme across the board really so far for me is that each group, as it were, in particular, obviously the board, the committee, and indeed the function, IA, have a role and responsibility. And broadly speaking, everything heads towards, an effective system so that the business can operate efficiently and therefore achieve its overall corporate objectives. If in doubt within an exam, if you're stuck, then always refer back to overall corporate objectives, effectiveness, efficiency, etc. So let's take a look at this area in terms of the need for reports, and indeed reports generally, contents, etc. Certainly the board should annually do the following. It should certainly conduct a review of the companies, or indeed the group system of internal controls. How effective are the controls? Remember, the controls are just a set of checks in place to make sure that the business runs efficiently, as I've just said. Outside of that, certainly in terms of the sort of content, it should cover all aspects of the business, material controls. In other words, important controls, financial, operational, compliance, etc. And indeed, in particular, risk management systems. You'll recall from the diagram within section 1 that the board's responsibilities really center in the first instance around an assessment of risk. Outside of that, certainly reporting. Remember, we see this word communication over and over again within this chapter, and indeed the internal control chapter as well. One key point here is just not to be confused about the different styles and indeed contents of reports. And on the one hand, we have obviously audit and assurance and management reporting, vice versa. Here we're talking about controls. We're talking about shareholders, the board of directors, and the IA function. Now, in terms of contents, again, much of this is fairly straightforward. Students might think, well, do I literally have to learn off the contents of a typical report? Not exactly, but certainly, most of the contents here are fairly straightforward. I mean, let's think about it. The nature of the internal controls, including any limitations, components of internal control, the various parties, the purpose of internal controls, etc., etc. So really, this area here is quite straightforward in terms of contents required and indeed the overall need for good quality reporting. On the one hand, we have an assessment of the controls themselves, but we need to communicate and report effectively. Otherwise, we're going nowhere. Now, in terms of this next area, we'll be aware of the importance of sustainability reporting. We're familiar with integrated reporting, etc., and indeed the increasing importance of the environment. Why is this? Well, it's stakeholder interest. More and more over the years, stakeholders are becoming interested, and that's customers, government, employees, even suppliers. And indeed, outside of just general interest on behalf of a myriad of stakeholders, certainly regulation is becoming more and more common. Think about things like carbon emissions and indeed target dates. Originally, target dates 10 to 20 years ago would have been around about 2040, 2050. Certainly, they're coming down across the board. Regulators in various jurisdictions are getting tighter and tighter and tighter. Now, as we'll see, though, in terms of the reporting side here, it's not as tight as it may well be in due course. We have on the one side mandatory reporting. Now, this is just an example. Different jurisdictions operate in different ways, but certainly in the UK, more than 500 employees, there's a requirement to disclose information, a variety of information, including the following, the model, policies, outcomes, risks, KPIs, etc. So, in essence, some jurisdictions are much, much tighter than others, the US as well. Now, in terms of the voluntary side, this is slightly different and more problematic, because if we're leaving it open to companies, open to the board of directors to decide on what is being disclosed, what is being reported on, then one issue that you have is them really choosing what's good and leaving out what's bad. The other thing that we don't have is comparability. But in terms of what might be reported voluntarily, generally speaking, some sort of info that sort of ties in the organization's sort of vision in relation to this particular area, the vision forward. We're familiar with the word vision. We're talking about the ideal sort of situation going forward. So some sort of statement, and indeed, outside of that, reference to stakeholders and the issues that stakeholders have made plain concern them. So really, in summary here, in terms of reporting on this area, two sides, jurisdictions different, trickiness in terms of comparability, and indeed the fact that different companies will report in completely different ways about different things, and some may take this as an opportunity to be honest and open, some may not. Outside of that, when we think about the responsibilities or financial reporting responsibilities, certainly, the effectiveness of the control systems or the financial reporting systems are absolutely key. Without a strong, well-designed, comprehensive systems, we certainly have an issue. In terms of controlling financial reporting, how would you do that? We've talked quite incessantly about the internal control system, but what about controls over reporting? Well, ICFR, these are specifically designed to control that process of financial reporting. And indeed, there's a myriad of information here. How reliable are our financial reporting systems and indeed our processes? I mean, obviously, reliable up to a point, but certainly accounting, as we'll be aware, we only have to think of accounting standards, to some extent is up for judgment. So, there is going to be, variations in terms of what one board of directors finds acceptable and what another board of directors finds acceptable, or what one set of stakeholders can understand and what another set of stakeholders can understand. So outside of that, certainly the design of the systems should be such that the process by which judgments are made is open, transparent and honest. That's not as easy as it sounds, in my opinion. In terms of obstacles, or indeed how do we get to the point where we can improve reliability? Well, a key obstacle firstly is people not owning it. And again, you'll see this common theme throughout this particular chapter and indeed others, that very often there's a reference to sort of tone at the top or top-down commitment. Again, think about it. If you're on the board and you're very much pro CSR, sustainability, very, very important to you, but nobody else on the board finds it overly important, that's a lack of ownership, and that means action, or good action, quality action, is probably unlikely. Outside of that, another key point is changes, variations. If we're changing, as we said up top, because of the degree of flexibility, generally speaking in financial reporting, and certainly in this area, given that to a large extent in many jurisdictions it's not mandatory, then in essence, different information year on year, it makes it much more difficult to understand, not just for the company itself, but also comparability. So what can be done? How can we improve? Well, clearly making things clear, not just in terms of the mission and objectives, but just really everything, transparency and indeed good communication. And indeed, in terms of this area, understanding exactly what sustainability is, why it should be a priority, and indeed ensuring that you build systems to report on it and to maintain your performance is absolutely crucial. Okay, so that includes the last 2 sections, 5 sections in all here. I hope that you found that helpful. In essence, what we've covered is, broadly speaking, roles and responsibilities. Who does what and how, and what can go wrong and what should we do to try to make things right. Thanks for listening. Please do join me for the next chapter. Cheers.